Before we begin, just a quick note. This podcast is produced by qualified financial professionals and is intended to share general information and insights to help expats better understand common financial topics. However, everyone's circumstances are different and regulations can vary by country, so nothing discussed should be taken as personal financial, tax, or investment advice. If you're considering making financial decisions based on anything covered in this episode, we recommend seeking professional advice tailored to your individual situation.
You're listening to Expert Money Matters with me, Georgina. At Chase Buchanan, our goal is to provide total clarity in an uncertain global landscape. To help you stay connected and updated wherever you are, we've adapted our weekly market update email into this convenient audio format. Here is your weekly market update for the 6th of May, 2026.
Good morning or good afternoon, depending on where you are in the world. On Monday, while UK markets were closed and many of us were enjoying the somewhat grey bank holiday weather, most global equity markets remained open. Geopolitical tensions once again took centre stage, pushing oil prices and bond yields higher, while equities moved lower. In Europe, the Euro Stoxx X fell by 0.9%, with broad-based weakness across cyclical sectors. Logistics, in particular, traded lower. This followed news that Amazon plans to open its vast logistics network to external clients, intensifying competition across global freight and trucking markets. Turning to the United States, the S&P 500 closed 0.4% lower, while the Dow Jones fell by 1.1%. This pullback follows a strong run, with both the S&P 500 and the Nasdaq posting their fifth consecutive weekly gain and closing at fresh highs on Friday. At the sector level, energy and software stocks moved higher, while more rate-sensitive and domestically exposed sectors, including consumer durables and transport, underperformed. On earnings, around two-thirds of the S&P 500 companies have now reported, with 84% beating expectations. This continues to highlight the strength of the current reporting season. Asian equity markets were generally lower, although Japan, mainland China and South Korea were closed for holidays. Monday also saw significant volatility in Brent crude prices, driven by the latest developments in the Middle East. U.S. Central Command announced that 2 U.S.-flagged merchant vessels had successfully transited the Strait of Hormuz, following President Trump's announcement of Project Freedom, an initiative aimed at escorting stranded vessels through the strait. The United States also reported strikes on a number of Iranian fast boats, and however, Iran disputed these claims, stating that U.S. reports on the success of Project Freedom were entirely false. An Iranian news agency also reported strikes on a U.S. destroyer and a U.S.-flagged tanker, both of which were denied by the United States. The United Arab Emirates announced that it had intercepted several Iranian missiles, marking the first such incident since the ceasefire took effect. Later in the day, reports emerged of a large fire at Fujairah, a key oil port, following a suspected drone attack. Located east of the Strait of Hormuz, this critical export hub is connected by pipeline to Abu Dhabi's oil fields and is capable of handling around 1.7 million barrels per day, even if the strait is closed. This pushed Brent crude back above $115 per barrel, although it is trading slightly lower today. The coming days could bring further escalation, as the effectiveness of U.S. naval protection through the strait is tested. At the same time, Iran has submitted a new proposal to the United States, which President Trump has said he is currently reviewing. Elsewhere, President Trump announced plans to raise tariffs on European Union cars and trucks to 25% and to withdraw 5,000 U.S. troops from Germany, further highlighting rising transatlantic tensions. Beyond geopolitics, several European central bank speakers flagged ongoing inflation risks and signalled the possibility of a June rate increase should oil prices remain elevated. Last week also saw several central bank meetings. The Federal Reserve, the European Central Bank and the Bank of England all decided to keep interest rates on hold for now. At the Bank of England, only one member voted in favour of a rate increase, suggesting no significant hawkish shift at this stage. The base rate, therefore, remains unchanged at 3.75%. Given the uncertainty surrounding supply disruptions from the Middle East, combined with weak economic momentum, this was widely seen as a pragmatic decision. The Federal Open Market Committee meeting marked Jerome Powell's final meeting As chair, he will hand over to Kevin Warsh, who has now received congressional approval. Mr. Powell has indicated that he intends to remain on the board as a governor as investigations into the Federal Reserve headquarters renovation continue. For investors, this provides a degree of continuity and stability as markets await greater clarity on Mr. Warsh's policy direction, which may, in practice, differ from his earlier indications. Looking at market performance yesterday, the FTSE 100 fell by 1%, while the Euro Stoxx X rose by 1.2%. US equity futures currently suggest the S&P 500 may open around 0.3% higher.
And that wraps up this week's Market Snapshot. If you'd prefer to get the information before it's published here, you can sign up for the update directly on our website. Just visit chasebuchanan.com and subscribe and get the update delivered straight to your inbox, giving you a head start on the week. Thanks for listening to Expert Money Matters. I'm Georgina. Join us next time as we explore money matters for your life abroad.